We bought Bitcoin because, yeah, gold was the best idea of the 19th century. And arguably, if you wanted portable capital, you wanted portable property, you wanted money for the past 5,000 years, right? Gold was generally a pretty popular idea. But in the 21st century, what you'd like is something that's as desirable as gold, but you want it to be programmable. You want to move it at the speed of light. You want to put it on an iPhone. You know, and the thing about Bitcoin, which is better, in addition to being programmable and digital, was that it's absolutely hard capped at 21 million coins. And so the inflation rate of Bitcoin is 0. It was pretty obvious to me over the long time horizon, as the limit goes from 0 to infinity, the inflation rate is 0.
Investors are feeling uneasy as the cryptocurrency market is engulfed in conflicting signals. After reaching a record high of $126,000, Bitcoin experienced a precipitous decline in the weeks that followed. In just 1 month, MicroStrategy, the corporate spokesperson for Bitcoin adoption, has seen a nearly 27% decline. Many people are asking the obvious question, is trust in Bitcoin finally waning as a result of the punishing volatility? The fear seems reasonable at first. Bitcoin finally reached 6 figures after years of anticipation and an influx of institutional capital. Major financial institutions joined the trend. ETFs inflows increased, and regulations improved. However, the market has produced sharp declines and excruciating whiplash rather than a steady rise, particularly for those who made purchases close to the peak. Jim Chanos and other skeptics see this retracement as confirmation. Michael Saylor, however, believes the exact opposite. Nothing essential has weakened in his opinion. On the contrary, everything has gotten better. The rules of accounting are more transparent. Tax treatment is more advantageous. The asset is now supported by large banks. There has been a change in political sentiment. The demand for ETFs and derivatives markets is still growing. Over 100 businesses have added Bitcoin to their balance sheets in the last year. The advancement of technology is more rapid than ever before. Why does the price struggle then? Saylor's response is straightforward. Markets have flaws. They frequently misjudge reality, run ahead, and fall behind. He sees what the general public perceives as deterioration as the best buying opportunity in years. Although sentiment may be negative, the fundamentals have never looked better. And he thinks the long-term benefit is exactly in that disconnect.
You don't sell things through hate, you sell them through love. So tell everybody how their life will be improved. I'm going to show you how to make your country better, your bank better, your city better. You have money market, fine, put my product into it. You have a company, fine, put my idea into it. I'm going to show you how to make your product, your service, your country. You know, you have an ideology, you want this kind of diet, I disagree, fund it with Bitcoin. You have that religion, fund it with Bitcoin. Bitcoin is for everybody. Bitcoin is the universal economic empowerment. If you look at the world today and you think, how many differences of opinions do we have? A lot. How many of the people that bitterly disagree use electricity? All of them.
Yes.
How many people that bitterly disagree on politics drink water?
Right.
All of them. How many people that bitterly disagree agree to use computers?
Find the agreement.
We disagree over the computer.
Right.
And so present this as technology and don't get drawn into the ideological debates and the political debates. I'm not here to destroy your business. I'm here to make your business better. I'm not here to undermine your ideology. Whatever your ideology, if you think that dolphins should fly and whales, should teleport and whatever.
I would like it if the dolphins could just win a
blue
football
demons
game.
coming down to turn us all into shuffle ducks.
Yeah, that's the turn.
You believe that, but just fund it with Bitcoin, right? I mean, we don't have enough time.
Do you think
to try to change people's minds? And Henry Ford didn't try to change your mind. He gave you a car.
He built a car.
You want the car, buy the car.
Yeah.
And I'm not going to change the politics in Europe or Russia or China or Japan or Brazil or whatever. I'm going to give you a bank account that pays 10%. You're getting 2%. You want it? Yeah, maybe you do. You're a bank. If you're threatened by that, my answer is, hey, why don't you just go take Stretch, build it into your bank account, and you offer your customers 8%, keep 2%. I'll power it for you, and you can crush all the other banks. And it's like, okay, you're going to be the first, dude with electricity in your factory, Yeah, my opinion on all the proof of stake networks, Solana, BNB, Ethereum, the like is
XRP
is the digital assets economy is bifurcated. There's two sides to it. One side is based on proof of work. It's digital capital. Bitcoin is the king. There's a dozen other proof of work networks. And the killer use case is store of value, digital capital, if you will. Bitcoin is digital gold. And the killer app is digital credit. Dividend-bearing securities backed by digital gold, right? That's that business. That is what I'm in. That's strategy. That's Bitcoin. Now, the other half of the business is digital finance. Digital finance is tokenizing your currency, like stablecoin. Tokenizing dollars, tokenizing real-world assets, tokenized gold. Tokenizing securities like bonds, tokenizing stocks, tokenizing Stretch, tokenizing MSTR.
When you say tokenizing, explain, what is a token?
What I mean is
how am I tokenizing it?
When I move stablecoin between, my Android phone and your iPhone on Saturday afternoon, it's Tether. Tether is tokenized dollars. Right, it's the ability to move a token that represents a bar of an ounce of gold, or a dollar bill, or a share of Apple stock.
So I've converted an ounce of gold to,
or Cardone Inc. issues 10 million tokens, and it's like equity in Cardone, or it's some kind of capital fundraiser, Joe Rogan coin, or Trump meme coin, right? Meme coins, Katy Perry token.
Should I have a token?
It's like. Probably, yeah.
Really?
At some point, but say you have a country club membership.
Yeah.
And let's say the membership is transferable. It's more valuable.
Right.
And let's say it's transferable on a token, and you can sell it to anybody. You can post it on a market and let people bid on it in real time, 24/7, 365. Let's say you can take that country club membership and you can tokenize it, put it on a DeFi protocol, and borrow against it and lever it up 10 to 1 and trade it on Saturday afternoon. My point is, like, it becomes more valuable. Right? Someone might lose money.
Yeah.
Somebody else might make money.
Yeah.
By the way, that's the argument for why the country club says we're not going to let you sell your country club membership. And the counter argument is, well, wait a minute. They didn't want me to sell it because they want to censor who gets to come to the country club. And so instead of selling it for $200,000 and making $100,000 and putting my kids through school, I have to give it back for nothing, and they screwed me.
Yeah.
According to Michael Saylor, Bitcoin is still one of the few genuinely untouchable assets in the contemporary world. He presents it as possessing a fixed portion of the worldwide digital economy, an asset devoid of boundaries, bureaucracy, and centralized vulnerabilities. Bitcoin continues to function on a self-upgrading protocol, unaffected by the instability that characterizes conventional systems. While governments clash, currencies depreciate, and corporations rise and fall. Because it is immune to the forces that distort stocks, property, or fiat, its appeal only increases during times of war, inflation, political paralysis, or monetary devaluation. What turns Bitcoin into pure digital capital is its independence. Adoption is anticipated to quicken as more people become aware of how distinct it is from each legacy asset class. Long-term discipline is the foundation of the optimism surrounding Bitcoin and related investments. It is not fantasy. Over the last 5 years, MicroStrategy has averaged 75% yearly returns thanks to its conviction in the face of extreme volatility. Even though Bitcoin's annual average has been about 50%, it is still volatile enough to catch people off guard. Saylor contends that the people who survive the upheaval will be the ones who stand to benefit from the true exponential upside.
During the COVID lockdowns in the middle of 2020, we had $500 million of cash, and the bankers took the interest rate to zero. And we were
500.
Yeah.
$500 million of cash.
$500 million. And, so it's like you have a $500 million real estate portfolio and the mayor of the city unilaterally reduces your rents to zero and tells you they're gonna rent control the rent to zero for the next 5 years because that's the right thing to do because we're in a crisis, right? There's COVID crisis. And if you don't like it, then you must not be a good citizen, right?
Right.
There's something wrong with you, right? You're just insensitive capitalist. And the right thing to do is we just reduce the rents to zero forever, which is easy to do with somebody else's money, right?
Yeah.
So that's kind of what happened during COVID, right? I mean, we literally did it with rents.
World. Yeah.
And we did it with capital. So when that happened, if that were to happen to you, if someone said, I'm reducing your rents unilaterally to zero forever, and you could sell the property and move to a different state or move to a different city, you might very well do that, right? So we had $500 million worth of property. It was called Treasury bills. It was unilaterally reduced to a value of zero per year. And I think Jerome Powell gave a speech and he said very famously, he said, we're not even thinking about raising the interest rates until the year 2024 or 2025.
Right. Repeatedly he said it.
I didn't need to hear that twice. So I thought I better go find something else to buy other than Treasury bills. So we started thinking, could we buy a stock portfolio? Could we buy a portfolio of art? Could we buy some real estate? Could I buy a fraction of a sports team? Should I buy a bunch of gold or should I buy a bunch of digital gold? And by the process of elimination, we went through all those things.
Had you been introduced to Bitcoin prior to that?
No, not really.
Okay.
I mean, I'd never really seriously thought about it,
okay.
Right? So I went through the process of elimination and I started thinking maybe I should buy gold, but then I thought what I'd really like is something that feels like gold, a non-sovereign store of value bearer instrument, and I like something which is the best cross between gold and Google. I wanted a digital monopoly on money. Digital gold. And I thought, well, this crypto stuff looks like it's digital gold, a crypto coin, 21 million crypto coins, because the appeal of gold is it's scarce and desirable as a store of value. And the appeal of crypto is I can teleport it and I can self-custody it and I can program it. So then I just started thinking, well, what's the crypto network which is most like gold? And I eventually decided Bitcoin was digital gold. And so we bought Bitcoin because, gold was the best idea of the 19th century. And arguably, if you wanted portable capital, you wanted portable property, you wanted money for the past 5,000 years, right? Gold was generally a pretty popular idea. But in the 21st century, what you'd like is something that's as desirable as gold, but you want it to be programmable. You want to move it at the speed of light. You want to put it on an iPhone. And the thing about Bitcoin, which is better, in addition to being programmable and digital, was that it's absolutely hard capped at 21 million coins. And so the inflation rate of Bitcoin is zero. It was pretty obvious to me over the long time horizon. As the limit goes from zero to infinity, the inflation rate is zero.
Why is it zero?
Because there's 21 million. That's all there's ever going to be.
Okay, so
there's 21 million.
Yeah.
Right. And the rate at which we create more Bitcoin is asymptotically falling to zero. It's falling to zero.
What is that word?
Asymptotically.
That's a big word, bro.
It's like if I try to go to the wall there, and each time I move, I cut my step in half. And I go half as far and half as far and half as far and half as far.
Yeah.
That's asymptotically approaching the edge of the room.
Wow.
But even over 1 billion trillion years, if I keep cutting my step in half, I'll never get there, right?
Yeah.
But on the other hand, you say, well, how wide is the room? It's like 12 feet.
Right.
Well, so with Bitcoin, you know that there'll never be more than 21 million Bitcoin. And in public company parlance, you would refer to that as the fully diluted share count. The fully diluted Bitcoin count between now and 1 million years.
There can't be any more shares.
It's like if you knew you were going to 21 million shares.
Yeah.
It's like when I'm valuing your company, I want to know, well, what's the total number of shares that can ever be issued between now and 100 years from now, right? I don't really care how many shares you issued this week or this month. I just want to know, are you going to 21 million shares? Or are you going to 2.1 trillion shares?
Right.
Right? And so the fully diluted Bitcoin count was 21 million. And the significance of that is that means the inflation rate's 0. But the inflation rate on gold is 2%. And the fully diluted gold account is infinite, because if I keep increasing the amount of gold by 2% a year, that's infinite amount of gold. If you want to figure out practically how you value it, well, when you increase the supply of something by 2% a year, that means that you're doubling the supply every 36 years. That means the economic half-life of your money is 36 years.
Michael. Saylor's position is audacious because he thinks that digital intelligence, digital assets, and digital capital are driving a once-in-a-lifetime transformation. According to him, autonomous machines will create the world around us. AI systems will think far beyond human capabilities, and money will soon travel at the speed of light. Legacy systems crumble under their own weight as efficiency increases. He cites the energy industry as evidence, pointing out that only a few years ago, nuclear and natural gas were politically doomed, until the AI boom compelled tech behemoths like Google, Microsoft, and Amazon to demand massive new power generation. According to Saylor, the emergence of digital intelligence and digital assets, reshaping national strategy, is the reason why energy suddenly became a bipartisan priority. He disregards the short-term price fluctuations of Bitcoin because of this larger picture. He sees Bitcoin as a part of an emerging technological wave. He even asserts that MicroStrategy used AI to create their new credit instruments, generating billions of dollars in value and one of the most successful launches of preferred stocks in contemporary markets. He contends that since the opportunities ahead are unparalleled, every business should be utilizing digital tools. Saylor treats critics with the same candor. He claims that short sellers like Jim Chanos don't advance innovation because they are in the doubt business. It's not the creation business. He is also clear about who should invest. Stay with stable credit products if you have a time horizon of less than 4 years, or if you are unable to tolerate volatility. However, if you know where digital capital is going, you should be paying attention to the current pullback. He reminds us that although markets are irrational and emotional, the underlying principles are stronger than ever. Political support for Bitcoin is surprisingly strong. Adoption is growing, and its infrastructure is maturing. According to him, volatility is the price you pay for exponential growth. The true question then becomes, is this correction the beginning of a much longer decline, or the last window before Bitcoin's next explosive surge?